All right, everyone, welcome to the Q1 State of the Market webinar with Investors Underground. It's going to be hosted by myself and Nate. Nate has got his microphone and his speakers all worked out. Do you want to say something?
I am. Can you hear me okay?
Yeah, everything's great. Everything's perfect. We've been messing around with all our wires for the last 20 minutes, but everything seems to be perfect. So we've got lots of stuff to get through, so we're going to jump right into it. The runtime for this webinar is going to be around about an hour. We sometimes run a little over with questions, but everything that's in here is in here for a good reason, so I think you're all going to learn a lot. Just a little bit of bookkeeping to start. As always, everything that we do here is for informational and educational purposes only. Myself or Nate aren't licensed professionals, so we're going to be talking about stocks and our opinions on stuff, and it should just be taken as educational or informational purposes. So what are we covering? Nate, what's going on in the webinar today?
So first and foremost, we're going to go over Momo trading, basically momentum stocks with volume, what it kind of looks like, why we're interested in just that, and how we take the trades. A little bit of a recap of the year so far. It's been a really good start. There's been, I think you guys probably know, but there's been ridiculous action every single day. Current market conditions, talk about what's pretty much working at this point, all the different types of trades that I've been taking, what I find is working more often than maybe things that I used to do in the past that isn't. So we're going to kind of discuss how I look for liquidity, what type of charts are of interest, and then just a little bit about patience and scaling up, because this isn't just something that happens overnight. It's very difficult. A lot of people fail at it, but starting to focus on big picture ideas, not just intraminute type trades, and then as you get a little bit better, the best way is to scale up.
So trading momentum. Basically, it's all about trading charts that we've seen before. So we're looking for patterns or pattern recognition in charts where we may have seen the similar setup, 20 or 30 times in the past. And out of those 30 times, 20 or 25 times, the outcome was similar after it's set up in that particular way, right? So we're going to take positions based on these patterns fulfilling what they're suggesting they're going to be doing. So the more volatility in these stocks, the more people are drawn to it. It's interesting because it's moving, right? And the more people who are drawn to it, the more volume it's going to have. And, these different people who are watching it, they're going to have different opinions and different trading strategies. And emotional traders will push the prices around, and smart traders can capture the profits on it. So, Nate, what's your kind of take on Momo, I guess, in general at the moment?
I would say last time we did this webinar, there was a lot of low float types of names that were trading 20, 30, 50, 70, 100 million shares a day. And there was a lot of, I guess not a ton, but there was a fear of the black swan. I think around the time we did this, it was shortly after KBIO and a few other big moves that we've seen. And since then, we've seen dries and things like that. We haven't had any of those for the most part in the last 6 months, but we have had just a lot of long side opportunities. And not necessarily that they're squeezing out hundreds and hundreds of percents at a time, but lately there's been a lot more money on the long side. And then the only way that you want to short these things is really letting them either parabolic and have zero interest until then, or just wait for them to crack and then start to look for the short on the backside of those moves. Because if you are getting in ahead of time in trying to find the top, you could be in this market 2, 3, 5, 10 days early.
Right, because everything's been so strong. So 2017 so far, I'm going to say I think it's been the best part of 6 years that I've been with IU. And 2017 has definitely been the best year that I've seen in this trading community. So Not only, I guess, has there been opportunities every day, but I feel like our general membership group or our general community is getting smarter and better at trading. We started with a pretty high overall quality, in terms of the people who are here day in, day out, been members for years. But what I've been really noticing, I guess, in the late 2016, early 2017 is just way more people are getting it. They're understanding what's going on. So we've got a new and improved chat room. So we built it all from scratch. It's got plugs into the back of a bunch of different APIs. So for example, it plugs into the back of a Twitter API and pulls data from there. And it also plugs into the back of a bunch of different finance websites. So, whenever there's a change to, for example, Citron's website, we get an alert before Citron goes and tweets it out. Or it plugs into the back end of the SEC EDGAR filing, so it's very easy to search right from the chat room. Just a bunch of cool stuff that we thought would be useful for all our members. And we've also got, I guess, more contributors, right? So every month we get webinars from Nate on, I guess, his momentum and his take of a momentum style. We get webinars from Michelle. She's a slower term swing trader. We get webinars from Alex, AT09. I guess he's the new, young, up-and-coming kind of trader who's seeing a lot of success trading momentum strategy. We've got webinars with Emil, who is looking at a particular setup called the high of day rejection, and he's more of a short-biased trader. And then Cody, who's super successful at trading OTCs when they're in play, because, I guess most of the year OTCs aren't really in play, but he'll trade momentum names during, the lull in the OTC times. But then when OTC start to pick up again, he's right there, ready to pull the trigger. So what it means, I guess, is we get a big variety of styles. It's not just one person at the top and everyone's kind of following and trying to learn from one. We've got a huge multitude of different traders, all successful in their own ways, who are all contributing to the community. And the last point here, I guess, is it's been a big pleasure for me to be able to watch all of these people thriving in the community and seeing a lot of success for themselves. So I guess Nate will talk a little bit about how his year's going. It's my understanding it's his best year trading as well, but he'll be able to walk you through a bit of that.
Let's not jinx anything.
You got to knock wood, right?
No, I started off very well this year so far. I was away the first week, actually at Cam's place, and that was a very nerve-wracking week because the market was just going straight up. And actually, I believe that was maybe Wednesday or Thursday, the 4th, 5th, somewhere around there was actually ETRM. So I think I might be happy that I was actually still on vacation at that point, because who knows, maybe I would have shorted that early and been in a bad spot. But overall, it's been a pretty good start so far, and I don't care about being green every single day. But one of the things that I pulled from you guys that know day trade on Twitter, one of the things that he told me a long time ago is that your P&L chart should sort of look like a stock chart. And a lot of times I feel like people focus on being green every single day, which is great. I see a lot of people do that, but at the same time you're adding pressure to yourself to perform every single day. Sometimes there might not be the perfect setup, there might not be the perfect trade, and you still feel like I'm down a couple $100 or a couple thousand. I need to make one more trade, and then it's your worst decision that you've made. So the biggest thing that I took from what he said is just think about big picture. As long as you're grinding higher and it's higher lows, at times you're going to have pullbacks. You're going to consolidate a little bit, then you're going to break out. You're going to pull back a little bit, consolidate, break out. And as long as your chart looks, I guess, like I don't know, Tesla just keeps on going or Apple, or the idea though is just that, look, you don't have to be green every single day, but just as long as you're focused on good trades, the trend is up, that's all that matters. And I think if you start to think like that, you'll actually probably see a little bit more success because on that same note, if you're worried about being green on a particular day and you only have a small padding and there's 2 hours or an hour to go, you might not take that opportunity because you think, hey, I could go red. I don't want to. I don't want to screw it up. So you might end up missing out on a great opportunity just because that's your thought process.
Yeah, that was one thing that Tom ECNC said to me. I mean, it seemed strange at the time, but now I get it. This is maybe a handful of years ago. I was like, oh, I just want to try and get green every day. And he was like, he was like, hey, if you're green every day, you're not actually trying hard enough, right? And there was something that just sat with me about that I guess, if I guess you're not testing the limits a little bit as well. Like if you're just in your comfort zone doing the, $200 or $300 clip every day or whatever, and you're green 30 calendar days in a row, you're leaving a big opportunity on the table if you are such a great trader to size up and I guess make something bigger of it, right? So
one other comment too, I had a conversation with Inefficient Market, which I'm sure most of you guys have seen on Twitter, and he kind of puts out all his stats, all his his P&L every single day, and he keeps himself accountable and whatnot. And we've had many conversations about it, which he's great, but he is kind of like what I was describing, and just slow and steady, which is very, very important when you're building an account. But at some point, you're going to want to, sort of test the limits. But on that note, we were talking, and I said the problem is when you're in a position where you've never been before, you're not going to know what to do. And when things, when you get in a short squeeze situation, or you bought something long and it just keeps on tanking, and you start to kind of either hit the panic button or, sell, or you don't really know what to do. And so by having this kind of stock chart type of P&L, it allows your rules to continually be tested, because if you never actually test those rules, you don't know if you're going to stick to them or not. And as most of you guys should know, we tend to be stubborn and break our rules all the time. That's what separates good traders from bad traders. So, the ability to test those rules and continually respect the rules is what's going to make you a better and help you excel later on. And so that's kind of, if you look at Inefficient Market, I think he was kind of going straight up, and then all of a sudden he hit like maybe a $12,000 or $15,000 loss, and it's like, holy crap, this has never happened to me before. And so then he actually bounced back pretty quickly, but then he had another hit, and he was able to say, okay, I've been here before, and bounce back even faster, and then continue to go on and go on and go on. So, and each time that he has a pullback or a loss, he's actually taking that loss much quicker. And it's not a devastating pullback 20% or something like that. It's becoming a smaller and smaller percentage of what he's made. And that's because he's been testing it. He's tested his rules multiple times. It's not the first time. So speaking of charts that goes, this looks like a short to me, but I hope not. But obviously, it's been a really nice start to the year. I think if you go back last year, I posted the same chart for the full year. I don't remember exactly what it was, but one of these is the IRA. One of these is my main account. My main account is my big account, and that's 79.47%, and then the IRA is up about 30%. Now, I mean, hopefully it keeps on going, but each day I reset. This doesn't matter to me. It's each day. I think the best part about this year is, I've taken a lot of losses, but a lot of small losses. I've let my winners run, and that's the biggest difference this year. Just being patient, waiting for the proper entries, and then when I'm on that right side and getting back to, quote unquote, the state of the market. In 2017, the real key has been patience, and we'll talk about it a little bit later on, like the good parts of patience and the bad parts. But yeah, it's been good so far. I think the biggest takeaway from this is, where the money is, and where as you start to scale strategy, as you start to trade larger, where do you want to focus? Where should most of your trades be, focused in. And as you can see, the blue is where I've made the most, and the red is where I've lost the most. But most of the stocks that I'm trading is 25 million and above. And I think that's very important to understand, because that's the longevity. That's the place where you can find consistency over time. It's not just, hey, who's hot right now? Who's alerting this? Who's doing that? It's more along the lines of actual real trading, real volume, real markets, and not something that is influenced.
Right. And I think the other point on this is, I mean, you're talking, I guess, about a big account, but I think also for a small account, 25 million and over, that kind of signifies to me that there's a real market trading the stock that you're trying to get in and out of. So even for someone who's trading, I mean, you might be trading 10,000 or 20,000 shares of something, but even if someone's coming and wants to trade, 500 to 1,000 shares of something, it doesn't mean that it's going to be any easier for them to trade something that's, trading less than 500,000 shares, right, per day. That liquidity is important at all sizes, but especially at bigger sizes, right? Because if you're, trading 10,000 shares on something that's something that's only got 500,000 shares volume, there's a big potential to be able to actually influence the stock price, which is something we definitely disagree with, right? So, when people, I think, are looking to even get into trading before they start scaling, 25 million shares and over, I mean, this chart almost represents things perfectly. That is the area with the most liquidity, the most opportunities, and in that area, you've made, more money than all of the other areas put together, right? And we'll be talking a little bit more about liquidity in some further slides. So let's have a look at some of the highlights and some of the lowlights. But one thing before we do this is I'd like to make mention of the scale here. The scale on this side is actually smaller, right? It goes to a lower number, but these are winners and losers. So
just real quick, a couple questions in the chat room, just as far as what the 25 million means. And that's not float, that's volume. So stocks that trade over 25 million shares per day. But here's tickers. This is just it shows like, your biggest winners, biggest losers. And it's not necessarily just one trade, but, overall, where the money has been. Like Cam said, I think the most important part is, your winners are bigger than your losers. And I've been working on that a lot. I've been working on letting winners run a lot. So Snap we're going to talk about next, but Snap was probably the biggest opportunity of the year. It probably should be about 7 times that, but I couldn't pass up a $2, $2.50 buck short within about an hour off that 27.75.
Right. Right. So we're going to go through Snap, and one of the reasons I guess Snap was such a huge opportunity is because we got a situation where not only do we have enormous amounts of liquidity, but we've also got enormous amounts of range, right? And I think this is what momentum traders dream about, right? Huge liquidity, so you can get in and out. You never have to worry about the spread. You never have to worry about whether there's going to be a buyer for your sells. We've got 30 million shares traded in the first 2 minutes of the IPO, right? And then probably 500,000 every 2 minutes after, right? So maybe even more, maybe even 1 million shares every thing. So you can trade, whether you're trading 1,000 shares or 100 shares or 100,000 shares of this, there was huge opportunities. And one of the other cool things I think about this Snap trade is that it is pure trading. It's a pure case of tug of war. There's no chart history on this, right? So everyone is really just trading based on what is going on right now. Whereas, like in a normal chart, which has 3 years of history, you've got bag holders, you've got people who are in at different prices, you've got all that kind of stuff. Really, this Snap intraday is about like a tug of war between sellers, buyers, and shorters and covers, right? So Nate's going to talk a little bit about this, and I know that he traded it over 3 days, but we're going to talk about day one. This was a significant clip, I guess. It represents 80,000 worth of profits or so for this year, trading these 3 days, I guess, in Snap. So I'm going to give Nate a chance to talk about it a little bit.
So Snap was a pretty good one. And there was a big opportunity, and the reason for that is probably all the millennials trying to get a piece of the action. But the way that I traded this, and also I would encourage you guys to check out the blog post, which I think maybe we can email it out after the webinar when we send out the replay and stuff. But I went over the call, the reasoning, the entry, and sort of how I scaled in on that blog post. Hopefully most of you guys have seen it. If not, you can always double check it out on the blog page. But the biggest thing here was kind of twofold. One was, I always try to focus on whole and half dollar marks, and it's kind of inching 24, 25, 26. But each time that it retested and pushed through a whole number, it kind of consolidated, and then it broke through, pulled back, consolidated, continued on. And the main reason, and if you go back to the blog post that I'm referring to, you'll see it up close. But the main reason why I started to initiate a short around 26 is because it pushed through 26 and there was just a ton of volume. You can kind of see it on this, but you can see it a lot better on the 1 minute. But much bigger increase in volume as it pushed through 26. It failed, and then it retested, and it failed, and it had a lower high. Retested again, it failed, and it had a lower high. So getting back to what I was saying earlier, rather than just kind of shorting anything in an uptrend, you need to look for stuff to push, to squeeze out, to stuff, and then pull back, and then retest that level again and look for it to fail. And if it fails, at that point, doesn't necessarily mean that you need to go, all in full size as to what you would typically trade. But at that point, you now have a risk that you can start to scale based off of. And that gives you sort of an educated risk for the potential reward of a stock that just priced at 17. It went straight up. It's way overvalued. Everybody's got an opinion on it. But again, the volume, 200 million shares. This is a play that you can commit within reason. Any type of size that you would want that is up to your standards, obviously. I'm not saying go all in margin and things, but the point here is, unlike lower float type names, there's a limit. You have to play relative to the volume. And with 200 million shares traded, 1,000, 10,000, 50,000 shares, it's a blink. It's gone in a blink of an eye. And whereas if you were trying to trade that on lower volume type names, you might push the stock 30 cents just trying to get out or get in. So the idea here is waiting for it to push out, waiting for lower highs. And at that point, you have that set risk. You can start in, and you know what? If you're wrong and it continues to head higher, you have that point to stop. And that's the most important part, because you took it because the risk was much less than the potential reward. So stick to it. You should technically be able to lose 3 or 4 times if you're early. For that eventual nail that you have, it should pay out, 4, 5, 10-fold. And so anyway, very nice pullback, and ended up being a really, really big day that day.
Very cool.
Another thing that has been working, and so this was a swing trade for me from mid-February. This is the type of chart that's been working in 2017. Huge stocks that have been, big in the past that gapped down and had some type of, event, whether it was a failure or they raised a ton of money, or they just, whatever the reason may be. There's been a ton of these types of, daily charts that just have huge breakdowns. And I'm talking NVAX, CERC most recently. It's OCRX is another one, and CERU. Just to name off, 4 or 5 recent ones, it's this chart pattern. The first part of this is, yes, it was a swing trade. There was a couple triggers that I wanted to use. I wanted to accumulate in the low 60s, and base the risk off the high. Basically 58 was what I had written in the chat. That was sort of the lows, I believe. So I wanted to accumulate that and then look to scale into the position if 75 broke, which was the prior highs. And so it started to break out at one point, went to 85s, and then it ended up pulling back. So that was one part of this trade. But the next part is the intraday. Let's just say you were not in the swing trade, and a lot of people weren't because they got bored out of it. It was probably about a 3 or 4 week hold or something like that. But what if you weren't in there? What makes it a good trade? What makes it something that gives you that limited risk for a better potential reward? And I think, Cam, you wanted to go over this one since you drew out the ABCD.
Yeah, so I guess if you look at this big day, the big day where it kind of gap filled up into that gap, it broke out of its prior range, and the big day that had volume was the most interesting day for me. So when I look at this intraday, I look at what is a pretty classic ABCD pattern, and I've got it drawn in here a little bit. So let's say you've been watching this for the last couple of weeks, and you've been waiting. Okay, I'm ready to trade it. Once it breaks out into that gap, I'm going to be a buyer, right? But you look at this initial move, and really, we don't love buying these, straight up chases because you don't really have a set risk. And, stock opened at 75 cents. We knew that, once it got into 85 cents, it's right into that gap, and the gap fill goes all the way to $1.80, right? But we really want to have a defined risk, especially if we're going to put some size on, So you've got that morning push, you've got that pullback, and this nice consolidation, right? And the other, rule that I have is, hey, I want to see $5 million of shares kind of change hands before I look at it, just so I know that there's a market there for buyers and sellers. If I'm looking at this and I see, 1,000 or 2,000 shares go down here, right? And then I'm buying 5,000 shares. Well, I don't know that there's a market that's going to be there when I'm ready to sell, right? But now that we've established that people are watching this and this looks like it's going to be a momentum play, you can see the A, that's the initial push. The B is the subsequent pullback. C is perking off that support. You can see the volume come in on C, and then I guess as it pushes out, breaks the high of day, hits everyone's stock scanners and all that kind of stuff. You can see how you can place a trade in the C area. Your risk is down on B. Even with a little bit of slippage, you're still getting, I would say a 4-to-1 on your risk. And that's a real ideal kind of play. It filled right into the gap. You got 13.7 million shares traded on the day. So this is a liquidity that we're comfortable trading. But, obviously it didn't hit that 25 million share kind of where most of the money's made. But great move from, what is essentially the break of $1 up until, you'd be pretty hard pressed to hold it until the bell, but up until this $1.50 area, you got a beautiful push where it breaks out, high of the day, lots of volume, and you've got the liquidity to be able to enter and exit this trade, as 500,000 shares are going down every couple of minutes, right?
So patience, there's a lot of points to this. One is letting the trades work for you. So one thing that I've seen, and look, I started that way too. But one thing I've seen with not only a lot of members who send their charts to me, they have an entry and an exit within 2 minutes of each other. They're afraid to be in the trade, and I think that it's important to kind of think big picture. And if you are looking at something too nearsighted, you're just going to be like in and out, in and out, in and out, in and out, and you're going to get burnt out. And it sucks when you're just the broker's winning, and you've done $500 of commissions and you've made $100 for yourself.
Right. It's not a winning strategy, right? And like if we go back to this INNL, sorry to interrupt, right? But if we're looking, I mean, if you were in and out of this in 2 minutes or 5 minutes or 8 minutes, right? That isn't the trade. We're looking for these medium to big picture kind of setups where, if we have a look at how long you got to be in this trade, well, you've been watching it all morning, right? So you've been watching it for 3 hours. So there's already some patience in itself, right? You've waited for the perfect entry. Here it is. You've got volume coming in. You take your entries and you've got to wait in this trade. You're in this trade from, let's say 12:15 till 1:15, right? Now, that's an hour, and I don't consider this to be a particularly long, like a long time frame to be in a trade. There are times where I watch Nate trading, and he will be in something like this all day because he believes in it. There's no reason that this can't do another A, B, C, D, and it kind of does into the end of the day, right? So, when we look at charts like this, I guess, if you're in a trade for 5 minutes or 7 minutes or something like that, what are you really going to capture, right? Like maybe a small uptick of volume or something. But this 1 hour trade, this is that kind of medium-sized picture where you've been watching it for 3 hours, you're in it for an hour, you capture a good chunk of the move, and you had a set risk reward where you're getting paid out dividends for what you're putting on the table.
That's not to say that you don't take off some along the if you capture a decent sized move, pay yourself some, absolutely. But I just feel like most people that are starting are just so trigger happy. They're in and their hand is literally on the sell button waiting for a reason to sell. And if that's a down tick or an up tick, it doesn't matter. They're just looking for a reason to sell at that point. So I think when you actually look at the big picture, like you were saying as well, and like full day kind of idea, look, if the stock rips and you're in it, absolutely locks them in. But I mean, just think about the reason that you went in the first place. You went in because you're anticipating a large move. So if it moves 5 cents, why is your finger on the sell trigger? So that's the kind of thought process that you need to go through, and then that leads into adding to winners. Now there's a lot of times that I might take some off, and I think a very important thing to understand is just because you sell some does not mean that you can't add right back in. If it does something that kind of makes you think, what, maybe I should take a few off, and then it does something else that says, hey, this thing looks like it's gonna go. And that actually happened with I'm gonna have to think about which one it was today. CPRX. CPRX today. If you those of you guys that are by your trade setups and whatnot, between 9:30 and 10 a.m. So right here, 9:30, it's got huge volume, starting to sort of get a trend, and it's holding around 140, 135, 140 area. So started in, but had a decent entry off the little bit of a washout, added in a little bit, but you know what? I was in a little bit too much more than I was comfortable with, so I went ahead and sized right back out. It snapped back, came right back up, and guess what? I can add back in. I can add to the winner. It doesn't matter. Just because I sold a little bit does not mean that I can't add right back in. Going back to the whole patience thing, going back to the whole big picture idea, you've planned this trade, you've seen this trade as an opportunity because of the big picture potential. So if that was your point, that's your goal with the trade, stick with it. And you're going to get frustrated along the way because, look, patience does not always work out. And Brett Steenbarger's book, which is a great book, Trading Coach, yes, that one. Very, very good book. Perfect if you have a short attention span. You don't have to read it in order. You can just go back and forth to whatever chapter. It doesn't matter what order you read it in. But one of the things in there was talking about, let's just say you're up $2,000 on a trade and you end up selling it for flat. And you start to beat yourself up over the fact that, oh, you know what? I should have took 2K, and I either lost a small on it or I sold it for even. It was a bad trade. And the problem is that's what you think it was a bad trade, but it really wasn't. And as you're learning this patience process, that's going to be probably the most negative aspect of patience. Is at some points the trades are going to go from great wins to an average win or flat or potentially a small loser. But it's part of the game. And, it's not always going to be just easy. Sometimes you're going to add, and that was going to be the top. And, the reason you added is because it was kind of a free trade. It was you're using the unrealized gains that you've built up to your advantage to let that trade work. And, when it works, you have more size. When it doesn't, it was a quote unquote free trade. So that's the downside to having too much patience. But there's a whole learning curve that comes with that. And then Cam's going to get into this, but it just patience in your career. It's not easy. It's not going to happen overnight. And there's a lot of people that fail at this. You need to have you need to focus on the big picture. And Cam, you can go ahead and take it away from here.
Yeah, so I think there's a problem in the trading community and broader society in general where everyone seems to want everything right now. And while it's easy to understand why people feel that way, it's not the way that the world is in reality. Everyone's going about, looking for things that would deliver instant gratification. But in a long-term trading career, instant gratification isn't something that you're going to receive, or it isn't going to be something that's going to move you forward. And I see all over the internet at the moment, you can work for a very short amount of time every day and be in trades for a very, very short amount of time and, have financial freedom, some kind of shortcut to financial freedom without really putting in any work. And I think that I put this slide in here just to try and balance out some of that. It's going to take time. It's going to take experience, and you're going to have to really lay a proper foundation of education before you can look at whether this is going to be something that you're going to be able to do as a career. Nate, what are your thoughts on this?
Yeah, I think that the biggest thing is, like you said, it's very fast paced. Everybody wants everything right now, and they think that it's very easy. You just join and join different services, and it's your shortcut to making millions, and that's not the case at all. And there's no secret sauce to financial freedom in 10 days, 90 days, a year, whatever. It's not something that you just join and it's join anything and it's here we go. And
financial freedom was not something that was even ever close to anything that resembled my first, 3 to 6 months. It was one of the hardest 3 to 6 months of my life, right? And I was lucky that I was able to preserve some capital while I just had no idea what I was doing. I was lucky I had a good group of people around me who were able to kind of give me some guidance. And I think we've built that into something that is stronger now than when I first joined up with Investors Underground. But yeah, I guess one on the next slide. So I guess it was either someone who had just signed up or someone who was looking to sign up with Investors Underground sent me through a spreadsheet of their goals, right? And this is something what it looks like. My apologies if you're in this webinar and you sent through this spreadsheet to me. You will remain nameless. But
we adjusted this a little bit so that it wasn't the same. And I think they are actually...
It wasn't exactly the same. Right. It was pretty similar. So basically, it was a breakdown of schedule. Month 1, I'm going to do this. I'm going to open a small trading account. I'm going to buy all my computer setup and do all that. Then month 2, it was, generate a profit of $20,000 or something that was quite outlandish, right? Then month 3, it was like achieve a win rate of 80%, and then month 12, make $1 million, right? And this is problematic in that you've already got hypothetical profits. You've already spent them in your mind, which is something that's like kind of crazy. Like, a lot of people come in and they're like, if I can only just make $1,000 a day, then I can do this and I can do that and I can I can do it. And they're talking about, they're supposing already that they're going to be successful at something that they've never tried before. Right. And, this isn't to say that good goal setting is a bad thing. If you're setting goals, hey, I need to study the markets every night for 2 hours after my 9-to-5 job. Well, that is something realistic. Then it's like, okay, every Friday I've got the morning off work. I'm going to paper trade every Friday for the next 3 months to see if I'm seeing some success. Like, okay, cool. That's something that's realistic as well. If I'm seeing some success in my paper trading, I'm going to open a small account and see if I can replicate some of that success into a live market environment. Okay, now we might be at month 3 or 4 or 5 or 6, right? Then it's like, okay, after 6 months of trading small size, I'm going to look at whether or not I'm able to scale up a little bit. Now I'm going to look at, okay, well, can I replace this income that I'm making from trading? Can I replace my full-time job? And is this something I can do full-time? Nate. So Nate's, I've spent a bunch of time in Nate's office, and it's, I guess, a pretty intense place to trade. He's got the chat room, Twitter. He's got the level 2s moving. He's looking up news all the time. He's got surveillance of his whole property on his screen, so he can see, I guess, when the FedEx guy comes, charts, you name it, it's all happening at once. So, Nate, can you talk about how you balance, I guess, this fast-paced environment by, also having patience? And we talked about this a little bit in the previous slides.
Yeah, I mean, we did touch upon it in the previous slides, but there's a lot of screens, but the idea is that you have less clicking around to do. Everything's kind of just there for you rather than having to do extra work and click back and forth between different windows and things like that. So you can kind of see everything at the one glance, but I pretty much minimize everything down to 1 or 2 monitors. All the, I might be watching 15 stocks on any given day, but I only have 3 to 5 main ones. And those 3 to 5 main ones are on my main monitor. And then I have my order entry one and chat rooms and Twitter and things like that on my other one. Everything that's happening, on 2 main ones. The other ones are just more about, other trades, secondary type watches, gold, crude, stuff like that, emails, things like that. Being able to focus in one key area where most of your action is going to happen is one main thing. The second is once you're in the trade and they're kind of working, you can also start to transfer those over to another monitor. So you can just kind of keep an eye on them, but they're no longer in front of your face because the idea is that you want to let them work. So let them work. Stick to your plan. Discipline, homework. You're coming to the market with a plan each morning. And you should be getting up early. The 9:20 a.m. guys, 9:10 a.m. guys that just kind of roll out of bed and, hey, what are we trading today? It's not going to cut it. You got to get there, get a feel for the market, get a feel for what's going on, and have the right discipline, have the right work ethic in the morning to get ready, get your screens all what you're looking at for the entire day, and then go from there. And then last but not least, during the day, you do want to have some type of accountability. And I'm not talking about all over Twitter. I'm not talking about with everybody, but you've got to have that 1 or 2 types of people or friends that you can talk to and you can bounce off your bad day, your good day, whatever it may be, without them getting pissed off, without them getting jealous, but always either picking you up when you're down or just celebrating with you, high five. So, I've got that with a couple of my trading buddies. Eric and I always, go back and forth every single day. And pretty much that's my unwind part of the day. Usually a daily checkup, 4:05 p.m. I'm talking to Eric, what's what's going on? How'd you do? Oh, I did this, blah, 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 and back and forth. And then, you're accountable, and you say what you did dumb that day. You say what you did great that day. And you're both happy for each other. And, sometimes Eric's like, man, I hate it. I feel like I have my best days when you have your worst days. And then vice versa. He's like, damn, every time you have a huge day, I lose. And, but the reality is we're a good team because we bounce those things off of each other. And we're kind of always there for each other. And the same thing with a couple other guys, Nikos for one. He's got a great trading partner. And it's not on Twitter, it's not publicized, things like that. But you've got to each have your own teammate that you can bounce things off of each and every single day to keep yourself accountable.
Yeah, and I think that works into the whole patience thing, because if you've got a plan and you're executing that plan, whether it's that long ABCD pattern on INNL, and you've got to show someone at the end of the day why you stayed in it, why you didn't, or if the chat room's kind of watching, and it helps you, I guess, stick to your plan, right? So next slide. All right, moving on. So liquidity. So I don't know if we stressed this enough earlier, but I think it is the most important part of trading. So, everyone, I guess, knows to look at candles and knows to look at, chart setups, but you really got to look down at the volume and say, can I get in and out of this? Is this something that has a ready and willing market when I'm there buying it, right? And then when I'm there selling it, right? Or shorting and covering. Right. So one of the most important things is, when you go to sell, you don't want to get spreaded out of 20 cents or 30 cents on a $5 stock, and the more volume that it has, the more buyers and sellers are there, the tighter the spread will be. And there will be someone to, take your shares when you're ready to exit, and there'll be someone to give you shares when you're ready to enter. That is what makes a market. Right now,
I think also, Cam, one other point is the more volume you have, the more natural of a market there is, and that's trading.
Right, exactly. So, when we look at, I guess, flow, can one person who's entering or exiting a stock move the market, right? Or can one person who has a following enter and exit the stock and move the market? And if that is the case, you've got to be very mindful trading them, and even double as mindful if you're the person who can move them. For me, I'd really like to see a minimum of $5 million worth of action before I look at trading this stock, right? And basically that means, if it's a $2.50 stock, I want to see 2 million shares traded. So that could be, 10 200,000 share candles, and at 9:40 I can be looking at this saying, okay, this might be ready for me to mess with, right? And that basically tells me that when I take my 1,000 or 2,000 share position on a $2.50 stock, it's a $5,000 position. I'm making up such a small amount of this that no matter what I do, or no matter what Nate does or anything in these kind of stocks that are super liquid, we don't trade stuff where we can affect the share price. We stay away from that stuff. So now I'm going to go into a few illiquid traps that you might see in the market. So this is, I guess, a very low float, very rarely traded kind of name. So on these days, it's trading less than 10,000 shares every day. There's no real market in this stock, right? But, whether a newsletter or a chat room or someone gets in, it perks up, you get that 200,000 share volume, everyone jumps in, everyone chases, and then you can see, well, those two candles is everyone jumping in. Those are those two green candles there. And, it's gone from $2.50 up to $2.80. And then these are the two candles where everyone bails, right? And you can see that these two volume bars pretty much equal these two volume bars. There's only really one group of traders trading this. And then once everyone bows out, this thing does nothing for the rest of the day, right? This is trading less than 100 shares. There are some minutes where this isn't even traded at all, right? So, if you're stuck with this stock, who are you going to sell it to, right? We've got a few more examples. So RNVA, so this, I believe it was some kind of newsletter or something like that, right? So you can see nothing going on all day, nothing really going on all day, right? Alert, runs up, abnormal volume, comes back down, nothing going on. There's no market in this stock. You know what I mean? And I think this is one more. All these stocks look the same. You guys get the picture, right? You need liquidity in these stocks.
Cam, if you can,
right?
if you can pull up OCRX2 from today, I don't know how easy that is for you. Just to show.
Very easy, Nate. Very easy. Wait up.
So another example is something like this, and just getting back to letting a market develop, and not necessarily that it was a bad trade or anything like that, but you can see sort of where an entry came and then where the exit came, and you can see the ramp up on the volume. Kind of just, it's an unnatural market. The market tries to figure it out, and then the sells come in. You can see that by the volume, and not as many sells came out, but it is what it is. So when you look at the full day chart today, forget that first move. And one of the biggest things that I try to stress, at least, is that's fine. You know what? There's going to be newsletters, hit pieces, different websites, whatever it may be that may alert stocks. We see this all the time, and we'll get into some of them with some of the hit piece websites. But let the market develop first. And look, it may be the start of something very big, but let it break out, let it pull back, let it consolidate, and then look for a pattern that you're familiar with. And you guys should probably see right now, coming around 2 p.m., 2:30 p.m., it starts to do the ABCD that we showed on INNL. And at that point, dips. You have a potential reward of a great breakout, and you have a risk of very minimal based off the lower the prior low. So yes, there might be some big pops, and there might be a trading opportunity that comes from that. However, it's best usually to let the market figure it out, because a lot of times when these stocks move, it's just because the market's hit with a ton of volume all at once, and it doesn't really know how to react to that. So, it all comes in, and it's like, whoa, what's going on? Was there news? Was there this? Was there that? And as people figure it out, it either consolidates and starts to break out higher, or it just kind of comes back and tapers off. And for me, at least, I'd rather actually buy higher than if I had just chased randomly, but with a proper risk. Because you can chase at any point in time, but look, it might work out, but the times that it doesn't, you're going to be right back to square one. And unless you're the first in and then the first out, you're going to be the last in and then the last out. And that just is not a profitable strategy. So, yeah, it's not good for your account. So yeah, that's sort of a case where you can see that it ramps up, comes back down, and then it starts to consolidate, and that's that.
Yeah, and then you've got that volume kind of surge, and this one, if you see, or if you remember my rule, hey, I want to see 5 million kind of shares traded before I do anything, or $5 million worth of shares traded, right? So if you see this, we got some okay little volume bars in here. So 100,000, 200,000. So by the time we get to around here, criteria is met. So that rule of $5 million of traded a day, that would keep you out of this move and probably keep you from selling here, right? But then as we're talking that medium big picture kind of move, well, this is a $1.50 stock, and there's, I guess, enough volume on the day. By the time you come to here and you're looking to buy it for the gap, well, this, on the dips, it would pretty much fulfill that criteria. And I guess, this move after hours was, I think, bigger than anyone expected, but, it was a nice little gap play. Let's keep moving. There's just one more one here. You can see it's more of the same. So pop, few minutes in the trade, and then back to sleep basically for this chart.
on this, if you want me to hit these up real quick, just the, going back to sort of what I explained on OCRX, there still could be a potential trade there. And there's newsletters, chat rooms, hit pieces, PR, whatever it may be. Sometimes you got to think about whether or not they have a vested interest. And, there are hit pieces that come out that all you see is it just hit a bid and then they just completely reverse. What kind of power do they have? And we'll go over, Citron Research obviously has a great following, and many others. How did their last do? Do they have a good track record? Things like that all come into play. And, there are some, I guess, quote unquote, washed up type of hit pieces where, they had a good run, but now they just use it sort of as a scalping opportunity. And I think you can probably see that with Street Sweeper or whatever. Just they had a great track record to begin with, but now, they alert something and then it just hits a bid and who knows, potential cover, maybe not, but just no secondary unwind, no pullback, which you might see on something like Citron or Carisdale Capital or some of the other ones. So a couple. Oh, okay. And one last point here. Why do they love the low liquidity? I mean, obviously you get those big moves, and sometimes when the lower volume type names comes in with a bunch of volume, you get that circuit breaker halt, and then you can add into that. It might trigger another one, and it's just a very easy way to have a stock move 30, 50, $1, $1.50, and it can be influenced very, very quickly. So just a couple examples of just hit pieces and sort of what I look for before taking a trade. And the first one is TDG, which just happened this past week. Citron came out, and obviously they have a great following, but just because they have a good track record does not mean that, if they say it's a short, it's a short. Everybody jump. And what I think the best kind of thought process to have behind this is to think about where most of the volume came in, and first off, did you get a good entry? Or did you have a good opportunity to get a good entry? How far has the chart come down on the daily first? Sometimes things are moved down prior to a release. Maybe different people had heard about it and started to lean in on a particular name, whatever the case. But what I look for is, if I miss that first move, which is fine, that's perfectly fine, and maybe I do. I look for it to rebound first, and then look to start to put on a trade, because basically everybody that just came in and just hit the bids at any cost is now going to be looking for an exit, because everybody just came in, just like what we were just looking at on the long side. This is just the complete opposite. You saw everything go up and then come right back down. Well, now everything's going down and then comes right back up. So everybody just kind of chases. Then it starts to, people start to cover, then short, cover, short, and, start to squeeze out a little bit. And it provides another opportunity. Now, I didn't trade this one perfect. I had some short coming into it, covered washout, started back into it a little bit early. But I had a decent padding and ended up shorting into the end of day push and held it short overnight. And so basically they didn't show up, and they, meaning the market, didn't show up the next day. And the reason for that is just because, the idea was short. There was a solid thesis behind it. But everybody chased it down, and then there was an unnatural rebound back up because it was just all short cover. Once they all covered their intraday shorts, it's back to reality. And then you can see the next day it was just a slow, steady fade down and pretty much held a downtrend line throughout the day. And the same thing on the next slide, CIA was another one. And they had come out with the hit piece, and it was actually the first... you did a 15-minute chart, but if you do like a 1 minute chart on this.
Yeah, I did a 15-minute chart just so that people could see the eventual fade off, right? So here's the big volume thing going on here, and then yeah.
So the 15-minute chart, I mean, you can still kind of see it, but basically, pretty much that 15-minute candle, the hit piece came out. So it went right down, and then it came right back up and closed green. And so what I used that for, so when it came out, it was about 780 or so, 790, 780. It washed out to, I think, 760s, and then ramped right back up to 820s, 830s, almost up to 850. And sticking with the same theme as Citron, I use that ability of the squeeze out to start my entry. And then as everybody kind of got squeezed out and provided a nice opportunity, I went ahead and tried to be patient. Covered a decent chunk at the bottom, but ended up being a little bit too patient. Held the rest of it and covered the following day, somewhere near 780s, if I remember correctly. So overall, it was a great trade, but again, same concept, just reverse. It didn't go up and come right back down. It went down and then ramped right back up. So just thinking crowd mentality. Trading opportunities like this is not about doing the same thing as everybody else. It's about doing the opposite, or waiting until the crowd sort of unwinds. And the crowd being, if they are buying, let them unwind and sell. And then if it starts to hold, then look for the entry. Just like OCRX example that I did earlier. Same thing. If everybody's shorting, let them unwind their covers and then look for your entry. Same idea.
Cool. And let's go next slide. Okay, back to big charts. So this is I'm gonna say probably one of Nate's favorite kind of things to talk about, especially now, as he's been working a lot on patience and looking for big liquidity, big move charts. He's got to be much more selective about what he's trading. So Nate's been trading JNUG quite a bit, and I guess we'll talk you through a couple of days of action in this and what the thought process is. So let's, Nate, if you want to talk about, I guess, why you like this so much, like why you like trading this so much, and where you find big opportunities in it.
Well, the thing here, and I'll give you a couple, like a list of tickers just to sort of see, like JNUG, SIG, PRGO, DKS, VRX, stocks like that. You'll see a lot of consolidation that is just like this box here in the green on JNUG. And the areas that I'm interested in is not necessarily in there, because that's sort of like a chop fest. You might be dead right, but it's got to wait another 2-3 days before it actually does it. And in the meantime, it's going to pull back, and then you're going to sell, and then it's going to rebound. And again, it's just a chop fest in between that channel. So the areas that I'm interested in is when it breaks out of those channels, when it breaks out of chart either resistance or chart support. And you can see that a lot on SIG, VRX, and SIG and all those, where it actually broke down under daily chart support. So I would encourage you guys to go back and look at those charts at some point tonight or tomorrow when you're reviewing this webinar. But just look at how they kind of consolidated for the breakdown or consolidated for the breakout. And pretty much how they react. And as you can see, as it breaks through that channel, that top, that's when the real moves start to come in, because it's broken out of that consolidation. It's prepared for this move, and as you can see, it's a nice move. And on the next slide, the same thing. You've got that same consolidation pattern. It's nice and tight in the red box, and you've got some huge chart support at 10, 1050 or whatever. And then when it breaks down under that chart support where it's been consolidating for quite some time, guess what? We have the same type of move, only on the reverse. So that is the types of situations that in this market, especially high volume, types of charts, that's what we're looking for. And again, the symbols SIG, PRGO, DKS, VRX, things like that. I'm sure there's a few others that I'm forgetting, but I tweeted them out recently. But they're just continually going back to these types of charts until the trend reverses and starts to go the other way. And when it does, you might take a small loss, but until then, just follow the trend down until it starts to have a little bit of a consolidation pattern, and then it starts to reverse trend.
And one thing I think is worth noting in these is this is a long and protracted move. Like this is a big and long move. So if you're trading something like this, what Nate I think has been really good at this year is he'll get on the right side of this, he'll see it breaking down, and then he'll be adding into these areas, right, and taking a lot of size along the way. And letting this trade, this is a great example of a trade really working for you, where you might start in, your shorts are here, and then you get this nice washout. Historically, maybe 3 or 4 years ago, they may have been our covers. That was the style of trading. Hey, we're going to be in it for 20 minutes or 30 minutes or something like that, right? And when you're, really looking for these big moves, well, it's one of those cases where Nate was like, hey, do you give away the $2,000 trade to make the $20,000 trade, right? And sure, this might, bounce back up and you'd be really frustrated that you left 2,000 on the table in, that smaller move. Well, if you let it do its thing or add into it, you give yourself the opportunity to, turn a $2,000 trade into a $20,000 trade over the course of 2, 3, 4 hours. You might be in something like this, so this is where liquidity meets patience and also meets scaling. You've got 80 million shares traded on the day, and JNUG, I know for sure, was a super successful ticker for Nate. You guys can go back to the slide where it kind of breaks down which tickers made what money or whatever, but I think JNUG was a $50,000 plus kind of ticker for Nate year to date so far. So that's where, like I said, liquidity meets patience meets scaling.
So scaling, achieving your full potential, that's sort of, I've been working towards that for every, for years. I've always kind of wired out or try to keep my accounts relatively small, because every time I had more money in my accounts, I'd do stupid things. And most of you guys have probably visited the YouTube channel and listened to the Greg interview and stuff, but he's like, I don't know why Nate always does that. And it really stuck with me. And so I started to, focus on continually growing my account, not wiring out, and actually getting used to having the extra buying power at my fingertips and doing the right thing with it. And it's definitely a learning curve. But like I said, it all comes back to the process and thinking about it as a stock chart: consolidation, breakout, little pullback, consolidation, breakout again. And when you think about it that way, it makes things a lot easier. And the other thing too is scaling in size is not just, I'm going to go double, I'm going to go triple, I'm going to go, 10 times my normal size. That's not what it is. It's taking advantage of A+ setups. It's not every setup, and it's not every trade. It's the days that, like we discussed on JNUG and all those other ones that I listed off, the days that they break out of range, the days that you're on the right side of the trade and you can continually add into your position with an educated type of risk. And on that note, going back to just 2 times, 5 times, whatever size, a lot of people will PM me and say, hey, I'm been trading really, really well. I'm thinking about sizing up. I'm thinking about, I'm just gonna go 2,000 instead of 1,000. Well, first off, every single trade is different. So 1,000 to 2,000 might be a major difference. But the other part to understand, just like I mentioned, is the trade at hand. And you're gonna know when you're ready to scale. You're gonna know what trades those are. And if you have to ask, and if you're not familiar, and is this the one to risk on? Then just keep trading and keep on trading the normal size, things like that. You will know when it's time to scale up. You will know which ones are your A triple plus setups that, you know what, it was worth the risk. And I might have lost, but you know what, if it was right, it would have been massive. And most of the time, the A plus 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 type setups are your 80-90% type conviction winners. And that's not to say that, with high conviction, it doesn't mean that it's going to go the right way. So you need to understand that. And one other thing to understand about it is, when I do get into size, I'm not really starting any bigger than I normally would. If I end up in a 50,000 share position, it might start at 2,000 shares like normal, 2,000, then 5,000, then 10, and then it looks like it's about to crack, and I double up, and then I double up again. And that is a big thing to understand. It's not always just, all right, guess what? This looks like a big trade, so I'm going to go in 20,000, then I'm going to add 20,000. No, a lot of them start very small, and it's just a reward of a good trade. You're rewarding yourself with more size. You're rewarding yourself for a good entry, and I guess that's the other key word is entry. Just patience and entry. The better entry that you give yourself, the least amount of emotional involvement you're gonna have in the trade, because you waited for that good opportunity to enter, and you have an educated plan, risk, and you're just gonna let that trade work. You went in with a plan for a reason, so don't veer off from your plan. You're going to run into emotional impacts, and that's part of the learning curve. Like I said, in the last state of the market thing, I think it took me 6 months of trial and error to, you think you're doing the right thing, and then it pulls right back. Think you're doing the right thing, pulls right back. And so there is that emotional part of it. Market impact aside, sort of what I was just talking about. Higher volume is your opportunities, but you got to think about, you might be trading a low float stock, and like, how much size is too big, and everything is relative to how it's trading. And if you're trading something that has pending news, that's not smart. Typically, whenever I do, I think I mentioned this at the beginning, but whenever I do trade some type of size, it's after a large event, whether it be earnings, whether it be some type of FDA approval, whatever that may be. The event is out, and now it's just the reaction to the market, and that part is why there's liquidity, why there's a liquidity event. And that's the days that I like to trade it. And that's every day I wake up and I look for the top 2 or 3 potentials, chart breakouts, chart breakdowns, for the potential of a continued breakout or a continued unwind. I mean, that's it. That's how to manage and deal with it, is exactly what I just said. It's just scaling in, scaling out, being patient, entries, and that's it.
I really like that scaling is a reward for having a good entry, right? Because I think so many people start scaling for the wrong reasons when they're in a trade that's losing, and let's say they're in at 1,000 shares, and they're like, well, I did have a plan to kind of, start to chip up my size a little. I can trade 2,000 shares of this, or I can trade 5,000 to try and get the average a little better. That's scaling for all the wrong reasons, but scaling to reward your great entry, or scaling to reward your patience, scaling is a reward of good trading. I really like that. I haven't heard that before, but that's cool. So, Investors Underground. I guess this is where we all get together and trade every day. So, Nate, how long ago did Investors Underground? How long have we been around?
2008, 2007, and then 2008 is when we started everything.
Right. So around 10 years. So we've done, I guess, a lot of development, and the community has really grown in that time. So basically, every day Nate puts out a scan. And now we have multiple moderators also putting out their own scans. where they're talking about what they're watching, why they're watching it. They recap the day a little and they make a plan for the next trading day. So that comes out at around, somewhere between 6 and 8 p.m. Eastern every night. And, a little bit of a recap of the day and then talks about what we're watching for tomorrow. So that's when you do your homework. Now, I also like to, do my own scans, but I find that 80 to 90% of what I'm finding overlaps with what Nate is trading anyway. So, the next day you come to the chat room and this is where the live trading happens. So I guess, people are talking about what they're watching, what they're trading, why they're trading it, and kind of, I guess, focused in on the market. And you've got 500 sets of eyes that are watching the kinds of stocks that we might want on our radar during the day, because we're all only one person, right? We've got 2 eyes and maybe 4 or 6 screens, depending on how much real estate we've got on our desk. I guess when you've got 400 or 500, 600 people in the room every day and they've got 4 of their own screens and they're watching eight of their charts, sometimes we miss moves, but they're able to bring, call them out and put them back on our radar. And then, as I said earlier, we've got a bunch of different people who do webinars every month. Nate, Michelle, Cody, Emil, AT09, Alex. How to get started with us? Well, if you're interested in finding out more, you can go to www.investorsunderground.com/state of the market. There are a bunch of different options in terms of ways to get started that vary between different kind of budgets and stuff like that. But, I really feel like trading is a very difficult thing to do. And at times it can be a very lonely thing to do as well, in terms of it's just you and your screens, and it helps to have a support network and be surrounded with people who have done what you're trying to do, but they've done it before, so they can kind of join the dots a little bit better as to which directions and what to be watching and how to get it done. So, you can go to www.investorsunderground.com/state of market. That's the URL, and there'll be a few options for you guys to all get on board. So we run way over time. We're half an hour over time, but we had, I think, around 200 questions, varying from what stocks do I look at to what is the meaning of life. So I think what might be best is we've made a resource that, as I was going through all of the questions, I saw that probably, I'm going to say maybe 60 or 70% of these questions have been answered in our beginner's trading guide. So if you haven't seen that already, you can go to www.youtube.com/investorsunderground. We put out what I think is probably one of the best, if not the best, free trading resource that's out there online at the moment. It talks about long setups, short setups, platforms, brokers, how to scan, where to buy, where to sell, how to enter, how to exit, how to place orders, how to place stops, all that kind of stuff that I guess is, a lot of the beginner questions that we get. I've covered it all in 8 lessons. So if your question wasn't exactly answered by that, I'm going to go through these questions and try and reach out to people one by one. But if you haven't already checked out the beginners series, definitely do so. That's youtube.com/investorsunderground. And obviously, a lot more of your questions are going to be answered in the Investors Underground DVD courses. And, we've got options for you to get started with us at investorsunderground.com/state of market. I think that's about a wrap, Nate. How can people get in contact with you, whether it's PM via the chat room or, whether it's email, or I guess I'll also add how to get in contact with me. But you're available during the trading day, like to receive PMs and that kind of stuff, right?
All day, every day.
All day, every day. So I guess if you've got an in-depth question and you're a member, that's something that might be covered in the webinars that we do for our members, a couple of times a week. If there's a question about something that's moving, or if you like, hey, I think that XYZ is kind of ABCDing. What do you think? That's a great question for the chat room, because you're going to get a reply right away from Nate or any of the other moderators. I guess if you're not a member but you've got some kind of question about signing up, you can drop me an email. I'm at cam@investorsunderground.com, or you can jump onto the website and there's a little Q&A form or whatever that you can submit to you right away. So I hope everyone got something out of this webinar. I ran a little over time, but I think it was for good reason. Thanks for attending, and I hope to catch you all in the Investors Underground chat room.